Hey guys, I thought I'd share with you my portfolio. The only 8 stocks I hold at the moment and will screen them through my 3 metrics. I can cheat this. I only have 8 and the only thing down right now is my Bitcoin exposure. Hot. Yes, I believe I am a value investor, but I also believe in crypto, which is very speculative, I understand. So I'll be in and out of this market. As you know, Bitcoin has its cycle. I chose this stock instead of Mara and Riot, as Hot has this both Ethereum and BTC exposure. Guys, as you know, I am very bearish of the markets right now, but I don't realize these gains because I bought them at a discount already. And I'd be happy to add more as they did. The only stocks I'd hold long term is Intel and LYB. But LYB here I'm cautious about. So I'd be looking at their quarterly reports very closely. I don't know for sure what to hold long term and short term, but for now, these are my only 8 stocks. Let's screen them through my 3 metrics. First one, LYB, Lyondell Basel. I have an average open on the stock at 94.84. This is one of my largest positions at the moment next to Intel. You'll see why I like the stock. The stock is under basic material. When I was searching for 5% dividend stocks, I found this one. And I took a closer look at their financials and I thought, why the heck is this undervalued? I like stocks with high EPS. I think that's the only way to win the game. First metric, 0.38. Love it. Look at their share buyback. 65 million shares in 5 years. And my dividend is safe at only 27% of the current earnings. Second metric, I assumed a very low PE of 678. Guys, if you want to enter the stock, use a PE of 678. That's with a very considerable margin of safety. From this revenue growth, you know easily the stock is very cyclical. It has its ups and downs. It's still trading at a discount, 0.73. Third metric, you can see that the stock has always been trading at low PEs. That's what I like. I want to keep adding to my positions if the markets don't see this as much. 0.97 discount. My fair value of the stock is $146. The stock is currently 107. Intrinsic value is 143. Oh, that's close to my fair values. Yep, this is from Guru Focus. Using my assumptions, I still have a high price of 135. And this is with a margin of safety. I'd love to add more, but I'm waiting for their quarterly results. Second stock is Intel, my biggest holding. My average open is 47 to the dot. I hate that it still has 4 billion shares. They had so much shares. They bought back 617 million and it felt like nothing. It's crazy. I have a multiple of 2.19 here and my dividend is safe at only 30% of their current earnings. Second metric, it's trading at a discount, half their margins, 0.54. This should easily trade at low 20s or high teens, I mean. You might want to accumulate shares here, guys. Next metric, it still trades at lower PE. My fair value is $97. Intrinsic value is 68. If it were trading at normal PEs, I'd still buy it below 80. This is the best value stock right now. Keep loading up on this. Next stock, third stock, Visa. I love this stock. There's so much word going around about this being overvalued and all, but to me and my metrics, it's not. My average open is 199.15. Although, I have a high multiple here in my first metric, 5.96. But again, if the PE is justifiable, I'm okay with it. My dividend is safe at only 25% of their current earnings. They're buying back shares aggressively too. 153 million shares in 5 years. Second metric, the stock is still trading at a discount. The PE I use here is Yahoo Finance again. Google, please update your PE. 0.75 times their margins. Still at discount. Third metric says it's trading at a higher PE now. Well, not so much. I'm not so concerned about that. My fair value of the stock is $290. Intrinsic value is 86. Well, this isn't always right, but you know. Guys, I have here a high price of 218, 217. I'd still buy this below 220, maybe. Fourth stock is Para. This was Vayak then. It changed to Para. I came across this stock through Jim Lebental, Farmer Jim from CNBC. And I looked at their financials and I thought, what? This is the makers of The Big Bang Theory and the owners of Showtime, CBS, and the movies, Paramount Pictures. I bought the stock with average price of 29.06. The valuation of the stock just didn't make sense to me. That I just bought it and yeah, look at these metrics. First metric, 0.82. Easy. High EPS. I like that. Although look at their shares. It doubled. But their EPS is still high. I'm surprised the EPS didn't suffer that much. I believe this is because of the Archegos incident where they filed for bankruptcy. The banks took over the shares and it shot up to $100 per share. Then it shot back down. I don't know. There's something about Archegos and the whole that. My dividend is safe at only 14% of the current earnings. Second metric says it's still trading at a discount, 0.87 times their yields. My entry PEs would be 456. I think that's only fair. But very, very little margin of safety. Their revenues are still stronger and on par with Netflix. Third metric confirms that the stock is still trading at a discount and by half. Fair value, $46. Intrinsic, $52. I mean, lots of upside potential. Fifth stock is Facebook, Meta, FB. Come on, guys. Everyone knows FB stock is undervalued. If you had listened to me and bought the stock below 200 and not listened to Mr. Wonderful, who you could have saved $40. Although my average open is 201, a bit high than 200, but it's still around those numbers. This can go as high as 445. Yes, 444. And my PE here is half their margins. That's how huge my margin of safety is for this kind of stock. This isn't as solid as Google's, guys. Social media can be very toxic and people could easily walk away from that. Sixth stock. This one I bought because their financials are still great and they only have 100 million shares to buy back. 19 million shares in 5 years. I like that it has high EPS as well. My dividend is safe at only 19% of the current earnings. It's trading half their margins. Guys, 3.56 PE. Are you serious? With 5% dividend yield? Come on. Historical data. It confirms it's trading at low PE. My fair value of the stock is $53. It's currently at 30. Intrinsic at $87. This is a screaming buy with high upside potential. Seventh stock, and the last stock I will be covering because HOT is really not a stock I would cover with this. Seventh stock is TXN. Now this one I told you about. Put a ceiling entry of 180. I bought it at 177. I was stubborn. I wanted to buy this at 3% dividend yield and it just went up slowly and I got left behind. Could have just entered at 160s. 2.7 multiple. Bit high, but still within my range. Dividend is safe at 56% of their current earnings. Second metric. It's still trading at a discount. 0.65 times their lowest margin. Although, third metric says it's trading at a higher PE now. Fair value of 285. Current price is 185. So that's 100 points above. Intrinsic value is 80. This is surprising to me. This is from Guru Focus. I don't know about this, guys, but I'm still a buyer below 180. In summary, look at this, guys. Don't it just look beautiful? Second metric is my most important one. It has to be below 1, maybe except for big tech stocks. I learned my lesson from that. I don't buy stocks at fair values, guys, but that's for my margin of safety. But again, I learned my lessons about Microsoft and Google. Those were in my watch list. I could have just bought them, but it shut right up. Next time, I'll be more accepting, and especially with high-tech stocks. Nvidia was also in my watch list too. It was trading 2 times their margins. I thought they'd go down more, as you know, the whole headwinds thing. But crazy markets. So yeah, these are my current holdings. I'm doing fine amidst the sell-off. I'm up some percent on all stocks, well, except my Bitcoin exposure. Let me know what you're holding in your portfolio and how they're doing amidst this market sell-off.